Well, hello everyone. Welcome back to Learn. Today is February 4th, 2025. It's about 8 p.m. here in southern New Hampshire. And we are at the website gordonphillipsacademy.com, and we're on the Learn page, Learn, which is a great acronym that spells Let's Educate America Right Now. Now, tonight, we're going to take a look at the performance of gold historically versus the entire United States stock market. And it might be a real shocker for any of you who haven't been paying attention or just weren't thinking about it. Last week, I took a look at the truth about stock market gains. In other words, when you adjust for inflation, how much are your stocks really worth? If they've grown what appears to be a tremendous amount nominally in the last 10, 20, 30 years, what are they actually worth in purchasing power when you factor in how much the dollar has lost in the interim? It's quite a shocker. I think you'll enjoy that video. And then the previous week, we had stopping inflation with precious metals. How much exactly, what percentage of your nest egg should you move into precious metals in order to stop inflation completely? So, in other words, your portfolio, a balance of dollars and precious metals, will maintain its purchasing power. So you have effectively have negated inflation in your life and in your retirement, which is incredibly important. So what we're going to do tonight is we're going to start by having some fun, and we're going to look first at whether or not it would make sense to invest in used cars. So bear with me. So here's the premise. You ready? The premise is that you're going to hold your retirement nest egg, your 401k, IRA, whatever it may be, in one or more asset classes. Now, when you think of asset class, an asset class could be real estate, or it could be equities like the stock market, or it could be commodities, or it could be currency, or it could be precious metals, it could be antiques or collectibles, or pretty much anything. But have you ever stopped to consider that the dollar is an asset class? So think of those paper dollars in your purse or your wallet with a picture of George Washington on them as an asset class. However, it's a heavily depreciating asset class. It's actually decaying in value with every passing minute, although you can't see it at that level. So here's a crazy question. Would it make more sense to invest and hold your nest egg, your life savings, your retirement in dollars or in used cars? Now, obviously, I'm being facetious, but I'm stretching a point to make a point. The point is this. If we have a retirement portfolio of $100,000, which is just a nice round number, and if we stipulate, as the internet informs us, that the average car loses 15% per year in value, and if we stipulate that the dollar, i.e., the Federal Reserve note, has been losing at least 6% in real purchasing power over the last 10 years, then this is what the graph would look like, where the blue line shows the drop in value of a used car over 10 years, and the red line shows the drop in the value of the dollar over that same period of time. However, if we raise the 6% to 12%, which has certainly been very much the case over the last 3 or 4 years, well, now the dollar's not looking too good. So obviously I'm being facetious here because nobody's going to go out and buy 40 used cars, each worth $2,500, and say, well, that's it. That's my portfolio. I've got a $100,000 portfolio priced in used cars that are losing 15% per year. But why would you then hold your portfolio in dollars? Let's call them used dollars. I never thought of that before. What a great idea. They're unless they're brand spanking new from the bank, they're used dollars and they're losing purchasing power every year. And it's critically important to understand. Now, in the past, just a quick little visit here, quick revisit. You get this Zoom panel out of the way. If we go to the Chapwood Index, and these are some people, I don't know who they are, I have no relationship with them, but they've done what the Federal Reserve and what government accounting office has never done, which is they've created a true, legitimate, genuine basket of goods and services, the price of which they can track in dollars year by year by year to show us what real inflation is. And as recently as 2022, 2023 was running an average of about 12% nationwide. Now, if we go to shadowstats.com, and I'm not sure why, but they stopped publishing a couple of years ago. But for 25 years, 23 years, from 2000 to 2023, the true loss in purchasing power of the dollar was about 6%, even though the government was telling us with a straight face that it was around 2%. So that's why I was using those figures. So now let's go to our other spreadsheet. This is the one I really wanted to show you. If we go to the Dow Jones Industrial Average and we go to the closing price at the end of the day, and we're starting in 2004, the reason for that is because there is an ETF, an exchange traded fund, that's a proxy for gold. It's GLD is the fund. As a matter of fact, if I come back over here to Yahoo Finance, you can go over here and type in GLD as your quote lookup, and you can get charts and historical price data for GLD. Click on historical data over here, type in the beginning and ending dates, and then update it, and you'll get all these values. You can download them and stick them in a spreadsheet. And this ETF started in, to the best of my knowledge, it started in 2004. So that's when I picked it up because it's just a very quick, easy daily proxy for the price of gold. The current daily trading value of GLD, the ETF labeled GLD, is 1/100th the price of an ounce of gold. So if we take this and multiply it by 100, we get the price of gold that day. Now, this data goes all the way down 5,000 rows to January 29th, 2025, which is just last week. And if we look at the cumulative percent change of the Dow, we find out that the Dow has grown by 300, I'm going to round off here, 323%. Make this a little bigger for you, 323% over 20 years. So from November 18th, 2004 to about a week ago is 20 years. So a 323% growth in 20 years is an average of about 16% per year. Pretty good. But don't forget, the dollar's been losing between 6 and 12% in purchasing power, which has to be netted out of that 16%. But look what gold has done in the same period of time. Gold has grown by 480%, not 323. It's grown by 49% more than the stock market. We'll call it 50%. We'll call it half better than the stock market. And here's what the chart looks like. This is where gold is currently compared to the Dow Jones Industrial Average. This is where they started together back in 2004. And gold is just screaming higher compared to the stock market. So you could have gone in 2004 and taken $1,000, $10,000, $100,000, whatever, and bought an equal share of the 30 stocks that make up the Dow Jones Industrial Average. Or you could have bought that same dollar amount of gold in whatever form you want to hold it. It could be bullion gold. It could be little bars of gold. It could be gold coins. My personal preference is rare coins because I do believe that we're going to have absolute financial mayhem in this country, and there will be a major financial reset, and a new monetary system will emerge like a Bretton Woods 2.0. And when the government, any government gets into serious financial crisis, they impose price controls, they all kinds of draconian measures. They shut down the banks, they seize things, they nationalize entire industries. And it wouldn't surprise me to see the entire precious metals complex one day be either nationalized or somehow severely restricted or regulated by the United States government. Remember, the president of the United States, Franklin Roosevelt, in 1933, took everyone's gold. You went to jail or suffered huge fines if you didn't turn your gold in. They've already done that. This country has already done that to its citizens. But what they've never touched And what Roosevelt's executive order exempted were rare coins. Numismatics is the fancy word. So if you're going to go out and get gold and silver coins, rather than get a coin just made this year or last year or 5 or 10 years ago, what about one that was made 150 years ago? They're not making any more. They haven't made any more in 150 years, and it's still a very nice ounce of gold or silver, but it's in brand spanking new condition. And goodness, it could be worth $20,000, $30,000 just for one small coin you can hold in your hand. Pretty easy to hide, pretty easy to squirrel away, stick away somewhere, right? Not very bulky at all. So I'm going to wrap this up. I want to keep it nice and short and sweet. I just wanted to show you what's really going on behind the scenes. Gold has dramatically outperformed the United States equities markets over the last couple of decades. And you saw it here first if you haven't seen it anywhere else, because the numbers don't lie. And I would urge you in the strongest terms to start thinking in terms of diversifying your electronic dollar holdings, would be 401k, IRA, SEP, KEO, bank accounts, CDs, whatever, into some form of hard asset. And there are many different hard asset classes to choose from. You could antiques or rare stamps or land or commodities or maybe paintings, fine art or semi-precious stones, whatever tickles your fancy. The easiest to purchase and turn around and sell are precious metals. There's precious metals dealers everywhere. As I've mentioned many times, I'm very good friends with the folks in New Hampshire. In Milford, little tiny Milford, New Hampshire, is the number one, in my opinion, the number one rare coin dealer in the entire United States. And there isn't even a sign out front. They're on the third floor of a bank building. You don't even know they're there till you walk in the lobby and there's a elevator button that says Rare Coins of New Hampshire, third floor. RCNH, Rare Coins of New Hampshire, rcnh.com. Go to their website, check them out, get in touch with Chris. This is a gentleman, Christopher, I guess. Chris Kahler, Kahler, Chris Kahler. Tell him Gordon sent you. Wonderful people. As my mom would say, salt of the earth, real gentlemen, really kind, real patriots. They totally know their game. No purchase is too small if you want to get started and kind of, stick your toe in the precious metals bathtub and see if the water's right for you. Start to get that experience. It's a wonderful experience, and you're holding a piece of history. You're holding something that has never been confiscated by any Western government, to my knowledge, and that is appreciating dramatically in value every year now that people are waking up. The deep money, the dynastic money, the establishment money, the old money, they're piling into rare coins because they can see the writing on the wall. So anyway, I hope this was helpful. Thank you. I'll be back again next Tuesday night at 8 p.m. Eastern. Not exactly sure what I'll be presenting next week, but it'll be something having to do with money and family finance. But you can come back and refresh the website. In the next couple of days, I'll have this video posted and an announcement of what next week's topic will be. And now I'm going to go turn off the recorder and thank you for joining me.